Hi, I am CA Vijay Kedia. Welcome to my channel. In today's video, we are going to talk about when you can consider yourself as financially independent and how much time it will take you to reach there. So, what is financial independence? Financial independence is a stage where you don't need to worry about money for your day-to-day expenses. I've already made a separate video on first step towards financial independence. Please do check out that if you have not done that already. First, how much money you need or how much corpus you need to become financially independent. In Western countries, the thumb rule is if you have 25 times of your annual expenses saved in some moderate risk instruments, you are considered as financially free or financially independent. But in Indian context, since the inflation is on higher side, 30 times of your annual expenses can be considered as your financially independence corpus. And second is how much time it will take you to reach there. People who pursue fire financial independence retire early, they save aggressively. They save 50 to 70% of their income and invest to become financially independent. So what I'm going to do is I'm going to calculate based on 50% saving, 60% and 70% saving, how much time it will take you to become financially independent. With that, let's start. To show you that calculation, I have prepared this sheet where I have considered first year's income as 1 lakh per month and saving percentage as 50%, which is getting invested. Second calculation is where 40% goes into expenses, like 40,000 is for expenses, 60,000 is getting invested. And for the third calculation, 30,000 or 30% is for expenses and 70,000 is getting invested. So here, what I have done is I have considered 10% annual hike in your income. So sometimes it might be less, sometimes it might be more. I'm just considering average 10% hike in your earnings. And at the same time, I have considered 10% hike in your expenses as well, because normally the inflation is 6-7%, but even if you consider your annual expenses to increase by 10%, uh, I have considered that in my calculation. And then you are investing remaining amount through SIPs, right, in the mutual fund. So here, what I have done is, if you see, I have projected this for 20 years, where for each year after 10% increase, your expenses are increasing and investment amount is also increasing. Similarly, with 40% case, your expenses and investment amount I have projected for 20 years, and similarly for 30-70% scenario, I have done the same calculation. For this calculation, I have considered annual return for your SIP to be 14%. And that I believe is quite reasonable, considering even the index fund should be able to beat this. So now consider the first scenario where you are investing 50,000 per month and number of years will take here. And then this is your rate of return. But how much money you need for financial independence? So for financial independence corpus, what I have done here is whatever is your yearly expenses, I have multiplied that by 30. So here 1 lakh is your monthly expenses multiplied by 12, which is yearly, and then multiply it by 30. So your financial independence corpus for year one is 1 crore 80 lakhs. Similarly, for next year is 1 crore 98 lakhs, and so on. And similarly, I have calculated for other scenarios as well. So now, if you invest 50,000 for at the rate of 14%, at the end of 15 years, you'll have 5 crore 10 lakhs. But at the end of 15 years, you would need 6 crore 83 lakhs to become financially independent. So this is less than that. Even if you consider 18 years, your corpus will reach 8 crore 77 lakhs plus, but you need 9 crore 9 lakhs if you want to become financially independent at the 18th year. So now, if I take 19 year here, then this corpus becomes 10 crore 44 lakhs. And for 19 years, you need 10 crores to become financially independent. So this is more than that. So at the end of year 19, you can consider yourself as financially independent if you're investing half of your income for financial independence corpus. Similarly, now consider this scenario where you are investing 60% of your income. Now, if I put 60,000 here, so your investment is also increased by 10% every year. And if you consider at the end of 10 years, your total amount is becoming 2 crore 24 lakhs. But if you see your retirement corpus for at the end of 10 years is 3 crore 39 lakhs. If I make it 13, then it's coming 4 crore 18 lakhs. But at 13, you need 4 crore 51 lakhs. 14 is the year where you become financially independent because your corpus is reaching 5 crore 7 lakhs and you need 4 crore 97 lakhs to become financially independent. So the thing which you need to see here is that since your expenses are less, the corpus required to become financially independent is also low. And since your investment is high, you are reaching there earlier. And in the third scenario, where you are investing 70,000 per month, which is again increased by 10% every year, then say if you consider 10 years, at the end of 10 years, you are reaching 2 crore 62 lakhs and you need 2 crore 54 lakhs to become financially independent after 10 years if your monthly expenses is 30,000 and which is increasing by 10%. If you see, you are becoming financially independent in 10 years. If you are lowering your expenses and increasing your investment, both is helping you to reach your financial independence goal faster because your required retirement corpus is less if your expenses are less, and then if your investment is higher, it's generating higher returns and you're reaching there faster. Hope this video helped you to understand when you can consider yourself as financially independent and the time it will take you to reach there. So the summary is if your expenses are low and saving percentage is higher, it will take you less time to reach that financial independence stage. But if your expenses are on the higher side and your saving percentage is low, then it will take you some more time to reach that stage. I'm also going to share that sheet in the description of this video so that you can use it for your calculation, and also share this video with your friends and colleagues who might find it useful. Please hit the like button if you like this video and subscribe to the channel if you are not done already, and I'll see you in the next video. Thank you.